In today's show, nearly a quarter of unique Bitcoin wallets are at a loss amid a $15,000 price dump. That's right, we touched as low as $36,000 this morning, and Bitcoin is down almost 30% in the last 7 days. In today's show, I'll be breaking down the latest technical analysis from Glassnode Analytics. We'll also be discussing where the Bitcoin price is likely to go next from here. And as Lex Mavosky points out, 3.75 billion and 461,000 traders got liquidated. Bitcoin liquidations were massive last hour, as you can see here. And as Max Kaiser points out, repeating 10-year cycle since Bitcoin was $1. Bitcoin makes new highs. Peter Schiff squirms. Suckers buy alts. Bitcoin kills alts with a big drawdown like now. Peter fillets himself. Bitcoin makes new all-time high. Peter squirms. Suckers buy alts. $220,000 in 2021. Still in play. Also in today's show, I'm going to be sharing 3 reasons why the Bitcoin price is currently tanking below 40,000. This includes stocks, China, and the US dollar. And as Rec Capital points out, a Bitcoin bottom forms when panic sellers capitulate and bargain buyers step in. Bargain buyers buy the panic. Panic sellers sell the bargain. That's right, because Michael Saylor is buying the dip. He just purchased another 10 million worth of Bitcoin during this crypto pullback. And as Calio points out, that was a 44% dip from the peak for Bitcoin. From here we go higher. You already know I got to leave you on a positive note. In today's show, I'll also be sharing an $83,000 Bitcoin price prediction in the cards after data shows that Bitcoin whales bought this dip. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, and all the major altcoins are currently bleeding in the red. But where's the Bitcoin price likely to go next? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. Welcome back to another episode of Crypto News Alerts. I'm your host, JV. Massive correction in the Bitcoin and crypto market. And as I called in yesterday's episode, Bitcoin price can hit $29,000 next, warns CNBC chart master. And this morning, we touched as low as $36,000 on some exchanges, and Bitcoin is down almost 30% in the last 7 days. And this dip has triggered an almost commensurate plunge in the percentage of wallets in profit. Data from crypto data provider Glassnode shows that the Bitcoin price drawdown has led almost a quarter of unique on-chain entities being at a loss. This situation also bears some parallels to previous extreme downside price action periods that interrupted bullish advances, as you can see right here on your screen, brought to you by Glassnode Analytics. During the Black Thursday crash of March 2020, unique on-chain entities at a loss also approached the 25% mark as Bitcoin fell almost 50%. Now, during this correction from the all-time high, we're down about 44% at this time, so this is nothing new. And further back, the 2019 rally from the 3,500 bottom of the 2018 bear market also had a similar temporary break that saw the percentage of unique wallets at a loss also slide towards 25%. And in all previous situations where the percentage of entities at a loss approached 25% during a bullish advance, Bitcoin quickly rebounded to post a new high. So it's not all doom and gloom. Sometimes we just need to zoom out on the charts. Now, Glassnode's price drawdown from the all-time high chart also paints a similar picture of a severity of the current Bitcoin decline. And as Calio points out, that was a 44% dip from the peak for Bitcoin when we hit almost $65,000. From here, we go higher. That's right, that 44% represents a $28,000 loss for the king of all crypto. And back in January, the price drawdown from the all-time high briefly touched 27% as Bitcoin's uninterrupted price quadrupling that began in September of 2020 cooled off as Bitcoin lost almost $10,000 within a week. And previously reported by Cointelegraph, Bitcoin inflows to exchanges have surged over the past week, reaching levels not seen since Black Thursday. The massive sell-off over the past week has seen the total crypto market cap lose about $700 billion within 7 days. More than half of that decline happened in the last 24 hours as several cryptos shed between 15 and 30% in a single day of their trading prices. And as Lex Mavosky points out, $3.75 billion and 461,000 traders got liquidated. Bitcoin liquidations were massive in the last hour. As you can see right here, Bitcoin liquidations 1.41 billion, Ethereum 1.1 billion, XRP 256 million, dogecoin 128 million, EOS 107 million, and the list goes on and on. And as Max Kaiser points out, repeating 10-year cycle since Bitcoin was $1, Bitcoin makes new highs. Peter Schiff squirms, suckers buy alts. Bitcoin kills alts with a big drawdown like now. Peter fillets himself. Bitcoin makes new all-time high. Peter squirms. Suckers buy alts. $220,000 in 2021, still in play. And he recently updated his short-term target from 77,000 to now 98,000 per BTC for the king of all crypto. Let me know if you agree or disagree with Max Keiser's bullish price predictions. And before I break down our next story of the day, and I share with you the 3 reasons why the Bitcoin price is tanking below $40,000, as well as Michael Saylor purchasing an additional $10 million of Bitcoin during this crypto pullback, as well as an $83,000 Bitcoin price prediction in the cards after data shows that the Bitcoin whales bought the dip. But first, let's take a quick look at the overall crypto market. OMG, Bitcoin now down 28% for the day, trading just above $31,500. Ethereum down almost 40%, trading just above $2,000. XRP down 36%, trading at $1. Cardano down a whopping 45%, trading at $1.10. Dogecoin down 40%, trading at 28 cents. And BNB down almost 40%, trading at $307. It looks like yesterday's prediction was pretty accurate, where I shared Bitcoin price can hit $29,000 next. Warren CNBC Chartmaster, because as you can see, we're only about $2,000 to $3,000 away from that 29K target. Who would have thunk? All right, now let's break down our next story of the day. Bitcoin hit its lowest price since February 8th and is struggling to maintain 40,000. You can say that again, but is Elon Musk wholly to blame? Cointelegraph takes a look at other factors working against the Bitcoin bulls this week as the market returns to levels that some thought would never appear again. Let's start with the US dollar bouncing off multi-month lows. Tesla CEO Elon Musk bashing Bitcoin's energy consumption with pure FUD is the narrative of the moment everywhere, but some classic hurdles to fresh price gains are also back this week. Among them is the strength of the US dollar, which is attempting to stage something of a comeback after a losing streak that began in late March. At this time, the US dollar currency index, which measures USD against a basket of trading partner currencies, had bounced off long-term support to reverse its downtrend. The dollar is traditionally inversely correlated with Bitcoin, and together with limp stocks, the conditions are right for tripping up the bull's progress. Nonetheless, Wednesday's dollar close was its lowest since January 6th, as you can see right here in your screen. Next up is tech stocks see trouble. Elsewhere in the macro picture, tech stocks are suffering, and that's also something which tends to not bode well for Bitcoin. Following the curious report of Reuters about China allegedly banning further aspects of crypto commerce, stocks began to come under pressure. And as Cointelegraph and many others noted, nothing new has come from Beijing, and trade associations have sought only to reiterate existing restrictions. Among the equity losers, however, was MicroStrategy, the corporate Bitcoin whale, which lost 5.2% on the day. The rout also afflicted Tesla in a somewhat ironic postlude to Musk's Bitcoin criticism. In addition to being relegated to the world's third richest man, Musk also presided over Tesla's Bitcoin gains almost entirely disappearing, which you can see right here in your screen. It shows you MicroStrategy versus Tesla stock chart. You can see them both dumping pretty hard. Now for the third reason why the Bitcoin price is currently tanking, it's the FUD, the fear, uncertainty, doubt, and Elon Musk sure didn't help with that energy consumption FUD, which is straight up all it is, but there may be light at the end of the tunnel. A curious tradition shows that after a China scare, crypto markets tend to produce huge rallies. When the country officially halted crypto trading back in September of 2017, Bitcoin and alts promptly shot up then to new all-time highs. Copycat moves by other jurisdictions are likewise known for their lack of bite. These include Donald Trump's criticism from 2019 and India's ban from earlier this year, something which is already being reconsidered. And checking out this tweet from Jason Williams here on Twitter, figure out a way to participate in buying the dip however you can. I've seen this play out before with Bitcoin so many times. Price down, news media piles on, FUD, price down further, then rocket ship to the moon. Also like to point out that exchange inflows within the past 24 hours reached their highest since the March 2020 crash and captured the fear amongst traders. As pointed out here by Lex Mavosky, 22,917 Bitcoin in a single hour were deposited into exchanges yesterday. This hourly inflow is rivaled only by the March 2020 crash. People are scared, and as Rec Capital points out, a Bitcoin bottom forms when panic sellers capitulate and bargain buyers step in. Bargain buyers buy the panic. Panic sellers sell the bargain. That's right, and Michael Saylor has been buying the dip. Before I break this down, Michael Saylor purchases an additional 10 million worth of Bitcoin during this crypto pullback, as well as some light at the end of the tunnel. $83,000 Bitcoin price in the cards after data shows that Bitcoin whales bought the dip. But first, let's take a quick look at the overall crypto market cap, sitting just above $1.6 trillion with 316 billion in volume in the past 24 hours, and the current Bitcoin dominance at 42.6%, with the ETH dominance at 18.5%. Now checking out the Bitcoin market cap, sitting just under 700 billion, while the Ethereum market cap is just above $300 billion. Now checking out the top gainers within the top 100. only stable coins because everything is in the blood red. So the biggest losers, we have Telcoin down almost 38%, trading at 2.8 cents. Shiba down 35%. Nexo down 32%, trading at $2.22. Revain down 30%, trading at 1.9 cents. And Internet Computer down 39%, trading at $108. Now, which altcoins are you currently most bullish on? Let me know in the comments right down below. Now, checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated at 23 in extreme fear. I can guarantee you tomorrow will be even lower considering we just had another massive bottom fall out in the crypto market. Yesterday was a 21 in extreme fear. Last week was a 68 greed, and last month a 74 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity like we're witnessing in the market right now. BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, now let's break down our next story of the day. MicroStrategy, the business analytics software maker run by Bitcoin bull Michael Saylor, has purchased an additional $10 million of crypto, adding to its holdings during a sharp drop in the price. Saylor, in a tweet on Tuesday, said that the company he founded bought about 229 Bitcoins for $10 million in cash at an average price of around $43,663, inclusive of fees and expenses. He linked to a Securities and Exchange Commission filing that reported the purchase. It appears that MicroStrategy had taken advantage of Bitcoin's recent price decline to continue beefing up its investment in the world's most traded digital currency. Bitcoin price fell into the $43,000 range on Monday, hitting lows not seen since February after Tesla CEO Elon Musk on Twitter spread FUD about not accepting Bitcoin any longer due to energy consumption for his Tesla vehicles. All I know is this: I will never purchase a Tesla. No respect for Elon whatsoever, just another Illuminati puppet, if you're to ask me. Now check this out. Bitcoin rebounded slightly after Musk clarified that Tesla still held its Bitcoin stake. Bitcoin has been steadily pulling back since he appeared on Saturday Night Live on May 8th, followed by his announcement that Tesla would stop taking Bitcoin as a payment because of the insane amount of energy needed to create new coins and secure the network. Bitcoin on May 8th traded above 59,000, and at this time we're currently just above 31,000 and still dropping. How low will the Bitcoin price go? Let me know your thoughts in the comments below. Now, MicroStrategy last week also bought the dip, purchasing 271 Bitcoins for $15 million in cash at an average price of $55,387. And with its most recent purchase, MicroStrategy now owns roughly 92,079 Bitcoins acquired for $2.25 billion at an average price of $24,450. So obviously MicroStrategy and Michael Saylor is still clearly winning, and I think they're going to have 100,000 plus Bitcoins in no time, especially if they keep buying this dip. Now, Saylor highlighted that MicroStrategy's latest purchase, a Bitcoin a day after he engaged in a heated online exchange with Bitcoin critic Peter Schiff, the chief economist and global strategist at Euro Pacific Capital, said that Saylor offered asinine advice to hold Bitcoin as an inflationary hedge. Saylor shot back with a screenshot showing gold would have provided returns 77% below those of Bitcoin over the past 12 months. And as we all know, Bitcoin has been outperforming gold massively and drastically over the past decade and will continue to do so in the future. Now, before I break down our final story of the day, $83,000 Bitcoin price in the cards after data shows that Bitcoin whales bought the dip. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 785 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button right below this video in the description for a detailed analysis of what's going on in the crypto market. You can also find me on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter. I am very active. My Twitter handle is cryptonewsyes. And for those of you on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. As Bitcoin tested the $43,000 support for the third consecutive days, whales bought the dip on the derivatives exchanges. While there has been no significant price change, the Bitcoin futures premium reached its lowest level in 6 months. This indicator matches December 11th, 2020, when Bitcoin hit a 17,600 low just 10 days after making an all-time high at $19,915. So keep in mind, this is nothing new. There's nothing new under the sun. As you can see here in this chart, it shows you the Bitcoin price on Coinbase, December of 2020. In December of 2020, derivatives action triggered a 95% rally in 23 days, taking Bitcoin to a new high of $42,000. In addition to the futures premium bottoming, rumors of potentially harmful U.S. regulation played a central stage role in the market downturn in both instances. That's right, regulatory uncertainties are back in the spotlight, all thanks to Janet Yellen stating at Washington Square Journal CEO Council Summit on May 4th that there are issues around money laundering, Bank Secrecy Act, use of digital currencies for illicit payments, consumer protection, and the like. Now, you and I both know this is nothing more than FUD, because we know the US dollar is used to launder money all around the world, banking to banking institution, where Bitcoin illicit use is like less than 0.5% or a crazy low number like that. And on May 6th, US Securities and Exchange Commission Chairman Gary Gensler punted to Congress the idea of providing more regulatory oversight to the crypto space, quoting him here, "Right now, there's not a market regulator around these crypto exchanges, and thus there's really no protection against fraud or manipulation." I like to point out that they can care less about fraud or manipulation. They only care that they cannot control Bitcoin, so they're trying to control the on-ramps, they're trying to control the influencers, the Elon Musk and alike, because that's all they can do at the end of the day. They cannot stop the king of all crypto, just saying. And added to the regulatory haze, on May 11th, the U.S. Securities and Exchange Commission issued an investor warning pointing out risk of mutual funds that have exposure to Bitcoin futures. You got to really think about it. If they really cared about market manipulation and people losing money, they wouldn't allow Elon Musk on Saturday Night Live to pump Doge, meanwhile bash Bitcoin with all this energy consumption FUD. You got to stop listening to what they say and start watching what they do. As Bitcoin price reached $19,915 all-time high on December 1st and the futures premium spiked above 15%, the premium reacted to the price correction. Although the 8% low seems near the previous month's average, it is very modest considering Bitcoin had rallied 90% in 2 months. Notice that soon the 17,600 level proved its strength. The futures premium spiked to 15%, indicating optimism, which you can see right here on your screen. The current situation began differently as the market has been excessively optimistic from the start. However, the situation drastically changed over the past week as Bitcoin dropped 26%. This move caused the futures premium to reach its lowest level in 6 months at 8%. Now let's discuss the whales aggressively buying below that $43,000 price level. The bearish sentiment on May 17th lasted a very short period as whales finally decided it was time to buy the dip. The top traders long to short indicator is calculated using clients' consolidated positions, including margin, perpetual, and futures contracts. This metric provides a broader view of the professional trader's effective net position by gathering data from multiple markets. Top traders on OKEX moved from a 1.62 long to short ratio on May 16th to a 2.74 peak as Bitcoin tested the 43,000 support in early hours of May 17th. This data indicates that whales and market makers had long positions almost 3 times larger than shorts, which is very uncommon. Although it might be too soon to declare that the correction phase has ended, there seems to be enough evidence regarding the futures premium bottoming and whales' intense buying activity below $43,000. Now for the moment we've all been waiting for. If history repeats and a 95% rally follows suit, Bitcoin could reach $83,000 in mid-June. Now here's the upside to all of this. Even though there is a massive correction of like 44% right now and Bitcoin is still dropping and we don't know precisely how low she may go, all I know is this: the lower she goes, the more the major institutions and the whales are going to keep buying and accumulating, just like MicroStrategy's Michael Saylor, and we will bounce even higher than anticipated. I would not be surprised if we hit $83,000 by mid-June. Just saying, but I'd love to know your thoughts in the comments right down below. Now for a quick recap of what I covered with you right here in today's show. Nearly a quarter of unique Bitcoin wallets are at a loss amid a $15,000 price dump. Now that price dump is in excess of $28,000. Crazy, right? Also in today's show, I shared that stocks, China, and the US dollar are the 3 reasons why the Bitcoin price is tanking, currently below $40,000, and that Michael Saylor scooped up an additional $10 million worth of Bitcoin to buy this dip. Also in today's show, I shared some optimism as $83,000 Bitcoin price is in the cards, as data shows Bitcoin whales bought the dip. But where do you feel the Bitcoin price is likely to go next, and how low do you think will go during this dip? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this.